we're talking about pathways to entrepreneurship specific to 2021. We are seeing things that we've never seen before. It's been an election year, the pandemic, social unrest. How does that affect entrepreneurship as we move into this next year? So I was a small business owner for several years. I started my own small business about 20 something years ago. It was a great learning experience. I learned a lot. I ran that for about 4.5, maybe 5 years. I got to the point as a small business owner where I needed to scale or bail, as I often say. I had a really exciting opportunity at a Silicon Valley startup. I was living in the Bay Area at the time, so I decided to bail and went the startup route. I made as much money as I'd ever seen at the time for about 6 months until venture capitalists pulled funding. I found myself out of work. I have worked in corporate settings, small business, family-owned businesses, and I have been a business and franchise consultant where I've taken all of that experience, what I've learned, done, and observed, and I have been a small business and franchise consultant for the last 8 or so years. I've helped place many people in business ownership, and I've also helped many people really better understand and research their options that may have decided that business ownership didn't make sense for them. I'm not here to say business ownership makes sense for you, but I am here to provide some information so that you can get a better understanding of your options in 2021, and to really help you decide if this is a path that makes sense for you. I'm also a volunteer educator and a mentor with the Small Business Development Center, with SCORE, and for some local job seekers groups. If we have anyone logging in from the Portland area, you might be familiar with the Lake Grove Job Seekers Group. I'm a mentor there, and there's some other just great resources and organizations and career coaches that can help you if you find that you're either in career transition or frankly, just thinking about making a change and wondering what path might make sense for you next. Now, in terms of what FranNet does, the best analogy that I can think of is a real estate agent. So I was born and raised in Portland. I went to college in the Bay Area. I was there for about 14 years. And my husband and I wanted to relocate our family back to Oregon, and specifically Bend. So what we did was we got a referral to a real estate agent that knew the Bend area. We talked to her about what we were looking for in terms of square footage, how many bedrooms, how many bathrooms, what kind of neighborhood we wanted to be. I'm a trail runner. I was hoping to be close to some trails. What kind of schools did we want to be close to? And we were able to really talk about our preferences, what we were looking for, and she was able to help find some options for us to look at. Very similar with buying a business. When we look at a business, we might think about, well, how much do I have to invest? What do I need to make? What transferable skills do I have to bring to the table? How do I want to spend my time? How do I want to spend my energy? What would I enjoy doing? Who do I enjoy being with in a professional setting? And what FranNet does is we help you deeper understand what it is that you seek in a business, and we're able to provide you with options, education. And I also consider what we do advocacy, because we are here to advocate for you, to help you better understand what path is really in your best interest, both you and your family, personally, professionally, financially. So please know that all of the businesses and the franchises that we work with have been thoroughly screened according to our standards. So we're here to provide you with pre-screened options. We don't sell anything. Similar to the way a real estate agent is paid by the seller of the house, we are essentially paid by the seller of the franchise. So it's really absolutely no cost to you. Here's what we're going to talk about today. We're going to talk about starting a business in today's reality. We're going to talk about common traits of successful and happy self-employed professionals. We're going to talk about 4 different paths for getting into business ownership and self-employment. Each individual path has its own unique advantages, disadvantages, and considerations. We'll talk about free resources for you as a new business owner or possibly an aspiring business owner. And I also encourage you to get your phone ready. So I will provide, you'll see this QR code off to the left. I'm going to provide a QR code at the end of today's session so that you can request additional information. You can request a recording of this presentation, some resources, assessments, an entrepreneur profile, all kinds of things. And if you decide that I can be helpful to you, you can get my contact information as well. So FranNet's been around for about 32 years. And I don't mean to sound insensitive, but this is not our first rodeo. So we have been helping people safely explore business and franchise ownership during all kinds of uncertain economic times, recessions, and whatnot. And what we're seeing today is that is dressed like COVID-19. Now, granted, we've never seen anything like this pandemic, but during these uncertain times, we really see a focus on recession-resistant industries. So you might look at an industry that has already been through a recession or an economic downturn and was able to survive or thrive through that. We see the focus on essential services. We surprisingly saw some businesses and industries in 2020, frankly, having their best year ever. Also, what we're looking at right now is because there were a lot of smaller, like mom and pop businesses that sadly did go out of business in 2020, we are seeing increased vacancies. We are seeing landlords wanting to fill these vacancies, providing more tenant improvements, lower construction costs, some things to keep in mind. And there are, in some ways, better financing options. It's not that there's any one economy that is the best time to start a business. If anything, we might look at certain characteristics in today's economy and find that the demand is the same, but the ability to get into business is actually less costly than it's been in the past. So let's talk about some recession or COVID resistant industries. And these are some examples that I invite you to consider in 2021. There are some growing markets that are driven by demographics. When we think about senior care or senior care services, we've got 8,000 to 10,000 people turning 65 every day. Residential repairs and home modifications. There was a huge surge in this in 2020, where people were reinvesting in their homes. Also, I would also include, which you'll see under essential services, is damage restoration. Speaking for myself, I know what it's like to have a pipe burst in the basement, and I don't care what is going on in the economy. I am going to pay to have that taken care of, and my homeowner's insurance will cover it. Cleaning services. Oh, the impact and the importance of cleanliness is more important than ever for both residential and commercial. Also along the lines of essential services, think about commercial signage. Think about all of the signs that we have seen, whether it's the typical upcoming holiday sale or New Year's or Happy Valentine's Day. But what about all of the stay 6 feet apart, masks are required? When we look at commercial signage, and we look at chains or even franchises that have signs, these signs are not shipped out to all of these individual businesses. These individual businesses work with a local sign shop to get these printed. Great example of something that can thrive in just about any economy. We've seen postal and shipping services do really, really well. Automotive. What about staffing? Surprisingly, staffing is an industry that has proven to do well in just about any economy. And even on the other side of a downturn, staffing tends to just boom and grow exponentially just as we're coming out of it. Digital marketing, expense analysts. Also, some business owners reinvest in their sales and employee training to really optimize who and what they have available with them and take their team to the next level. Now, there are 4 different paths to entrepreneurship that we're going to talk about. There is the startup entrepreneur, independent consulting. You can buy an existing business or pursue franchise investing. Now, each of these paths have specific pros and cons and specific considerations. Now, before we get too deep in those 4 paths, I do want to talk about some common traits that I have observed and learned and witnessed over the years of people that are happy and successful as business owners or self-employed. And I want to start with, these people are never too comfortable. And what I mean by that is really a healthy or welcoming relationship to change. So most people that are happy and successful in business ownership, they anticipate change. They welcome change. If anything, they might even see change as an opportunity for something new, new development, new growth, scalability. To think that once we become a business owner or self-employed, that things are going to stay exactly as they are is really unrealistic. So you might ask yourself, what is my relationship to change? I would also say that happy, successful business owners are somewhat control oriented. And I'm not talking about being a control freak, but someone who is decisive and who likes to be empowered to make decisions over themselves, their career, their lifestyle, someone that likes to be able to make decisions that can lead to greater security for themselves and their families. Are you someone who can be decisive? Other traits, someone who is self-directed. And what I mean by that is not someone who needs to be prodded and pushed by other people, but are you internally motivated to take action? Do you have a competitive spirit? And I don't mean I'm wanting to beat someone else or be better than, but in business ownership and self-employment, there is, quite frankly, competition. And I would say a lot of entrepreneurs have a competitive spirit where they like to compete almost with themselves, where they want to perform better or achieve more than they did last year. And it's almost a calling of, I want to do better and be better than I was in the past. Business owners and entrepreneurs oftentimes are leaders. And this doesn't mean that you need to have a track record of leading others, but leaders are really people who are willing to go first. So are you willing to take the lead on your own self-employment or business? Are you willing to step out and be the first to move forward in this new venture for yourself, for you and your family? Business owners are comfortable delegating, and I recommend delegating early. No one can do all things. So when you know what your gifts are, if you know what hat you want to wear in your business, instead of trying to be the jack of all trades and master of none, can you delegate those out and really focus and drive on what supports the bottom line, wearing the hat that you want to wear? And also expect mistakes. No one does it perfect. Elon Musk, he's made mistakes. Bill Gates, he's made mistakes. So understand that you will make mistakes. And a common phrase is fail fast. So know that you're going to make mistakes. And when you make those mistakes, can you move on? Can you learn from them and move on quickly? Let's get into those 4 paths of entrepreneurship. So we will start with the startup entrepreneur. Now, this is the option to start a business purely from scratch. And some advantages are you get to do everything just how you want to do it. You have complete control. You get to make all the decisions. If you are really creative, there's plenty of room for creativity. Nobody's going to tell you how to do it, when to do it, in what way. So really, there are no rules. If you're in an industry where there is some licensing, yeah, that might impact you, but really, this is, you get to do it the way you want to do it, when you want to do it. And really, if you have a passion, you can build a business around your passion. I would say that is a huge driver for startup entrepreneurs, is they have an idea. They have an idea that they're passionate about, and they want to create or manifest their idea, their passion, just the way they want to do it. Now, there are some downsides to being a startup entrepreneur. Not only do you get to do everything, but really you have to do everything. So someone needs to create marketing systems, customer acquisition, sales systems, accounting, supply chain. There's all kinds of systems that need to be put together to support your business. And there are fewer financial options for financing a startup business. Startups tend to have a slower ramp up, and consequently, they statistically have a higher failure rate. I just listened to a seminar this morning that said that 90% of startups have a higher failure rate. And it's not because the business is a bad idea. And it's not because the business has bad systems or maybe there's low demand. Really, there is a learning curve when it comes to a business startup. And there is trial and error. And what happens during this learning curve, during this trial and error, is, quite frankly, do you have the mental and the financial bandwidth to make your way through the learning curve? Do you have what it takes mentally and financially to get through that time of trial and error? I would say that the number one reason that small businesses fail is lack of working capital. Again, it's not that the business idea is bad. It just takes time to figure out, work out the systems. So some things to keep in mind. Now, some considerations is there's a lot more to a successful startup than having a unique product or service. Even if there's a lot of demand, first of all, how will you compete in the market? What does competition look like? And remember, competition is good. Competition shows that there is demand for the product or service, but how will you differentiate yourself? Be prepared when it comes to accessing financing. There needs to be a marketing plan. There's going to need to be a financial projection. The bank or the lender is going to want to see, what are you spending money on and when? What money do you anticipate coming in and when? How much? How often? Be prepared to provide a month-by-month cash flow projection to access financing, and just know that there are fewer financing options for a startup. Now, independent consulting is probably, I would guess, the fastest growing path to self-employment and business ownership. And it has a lot of the same advantages as a startup entrepreneur. There's lower cost. This is something that you can step right in and start your own consulting practice. So it's a quick startup, quick ramp up. Again, you get to make all the decisions and you get to do it the way you want and when you want. You get to be very creative, and it's based on your skills. So this is based on something that you already know. In some ways, the trial and error some of that has been minimized because this is based on what you already know and in some ways have already done. I think what often people don't realize when they start a consulting practice is similar to a startup, is you got to create systems. So if you have a certain area of expertise in consulting, you're still going to need to figure out, how much are you going to charge? What does your customer acquisition strategy look like in terms of if you are working on a project and you have a deliverable, having a keen understanding of how long is it going to take you to provide that deliverable. Also, I think the biggest thing about independent consulting that people don't realize is that this is really heavy in sales. And I'm talking about prospecting, customer or client acquisition. So oftentimes people think, well, I love providing this service in this area of expertise that I know so much about. And you could be incredibly gifted and knowledgeable and skilled in this area. But how are you going to get your clients? This is largely dependent on your network. Who do you know? One way to get into it is maybe consult for a previous employer, where you already know some of their inherent systems and you know their business and they've worked with you. But please know that there is a different liability because you are now responsible for your employee taxes. There is significant competition. And if you're looking to build equity, if you are looking to start something and have the freedom of business ownership, when it comes to independent consulting, it's really hard to build equity and sell it because it is so largely dependent on your individual skill set and really your relationships. So if someone wants to come in and buy your practice, they don't know what you know and they don't have the relationships that you have. So it's harder to build equity. Now, some considerations. Ask yourself, if you're thinking about independent consulting, am I good at selling and networking? Because that's going to be a large part of independent consulting is customer acquisition and prospecting. So again, how will I get my customers? How can I create equity? If that's important to you. Now, that might not be important to you, but if it is, when you're thinking about an exit, how can I create equity? Remember, again, you are now responsible for self-employment taxes. And one thing to keep in mind that is often common with independent consultants is you may end up partnering or working in parallel with other consultants. Now, there are opportunities for joint ventures, but we want to make sure that they are appropriately set up and not making you vulnerable to any exposure if they haven't set themselves up appropriately as W-2 or 1099. Also, might you bring them on as employees? How could that impact you and your bottom line? And what types of liability might you be open to that you need to get coverage for? Now, buying an existing business. It seems, I would be curious to hear what some of my colleagues think, but gosh, it seems like in the last 3 to 6 months, I am getting more and more and more requests for people that are looking to buy an existing business. I think business acquisitions are a great way to mitigate risk and to build equity. And there are huge advantages. I mean, for starters, there is immediate cash flow. And for some people, financially, for them to make the leap into business ownership is cash flow might be a non-negotiable, having that immediately. And you get to see the financial results. You get to look at the books. You can have it evaluated by a CPA. Certainly going to be more attractive to lenders. And there's an established market. There is established customer base, established employees. There might be systems in place, some of the systems that we've already talked about that you would have to create as a startup entrepreneur, but an existing business will likely have systems for customer acquisition, sales, marketing, supply chain, HR, accounting. And there will likely be owner financing available to you. Now, some disadvantages to buying an existing business is what is the actual cash flow of the business and what is the seller running through the business. Business owners can be really creative around April 15th. So it's important to really validate the cash flow. You can have a CPA or someone look at that, but even then, this is not highly regulated. So there are, even after we look at the books, there are still going to be some unknowns. Why are they selling? Now, a statistic that was shared with me is that 2 out of every 3 small businesses, and this includes franchises. Franchises are a small business. 2 out of 3 are sold to an employee, a family member, or a friend. And that opportunity, that transaction was never available to us. So when we look on certain websites or maybe when we deal with brokers that are looking and we're looking at business acquisition opportunities, these are the 1 out of 3 where an employee, a family member, a friend did not want to buy the business. And I can't help but ask myself, what do they know that I don't know? I don't know. It could be very legitimate reasons, but also something to keep in mind. A resale is simply, it's going to be a higher investment. I mean, we're buying the business. Partly, this is someone who has already done the grunt work of those first few years, you might say, of getting the business up and running. And they're going to charge for that because they went through that learning curve, if you will. So it tends to be a higher investment. Other disadvantages is there might be outdated equipment, outdated software, poor training and support. And this is kind of a catch-22. On one hand, when we buy an existing business, we certainly want to get trained and supported by the seller so they can teach us how to be successful in this business. At the same time, it can be very confusing for the employees, referral partners, and network when there are two owners side by side. So we certainly want training and support, but we also want to be clear when the business is under new ownership, we want it to be really clear who the owner is, who is in charge at that point. Hidden seller motives, I kind of addressed that before, but why are they selling? Will the employee stick around under new ownership? Truth of the matter is you may not want all employees to stick around. So long-term, having that turnover might be in your best interest, but in the short term, there might be some turnover. And again, buying an existing business has a higher debt service. So some considerations when it comes to a business acquisition is the hardest part is finding a good one to buy. I mean, think about it. If the business is successful, profitable, most of the time, the less involved the owner of the business is the more valuable it is to other people. Like, wow, a revenue stream where I get to be relatively passive. If that business is providing all of those things, why are they selling it? Expect to have to commute or potentially relocate to find if you have certain criteria. I had mentioned earlier as a real, as what it's like when you work with a real estate agent, if you have certain criteria in what you seek, you are more likely to find a business with that criteria if you expand the area in which you're willing to look. So this might involve commuting, it might involve relocating. Some sources for you, a website, a very popular website, probably the largest with business resales is bizbuysell.com. You can also work with business brokers. I would also encourage you to maybe network with some professionals that help business owners prepare for their resale. And if you can get in their inner circle, you might say, let them know that you are looking for a business acquisition. They might include you when they hear about opportunities. So get in that inner circle if you can. Regarding financing, so financing, that is looking at the history of the business in terms of what it's earned in the past. So if you're looking at a business acquisition and you see potential and you see how you're going to grow and scale that business, when it comes to financing, they are not looking for what you hope and anticipate. They are looking for what actually is, was, and has been. And also keep in mind, you'll likely be asked to sign an NDA as you get serious looking at a business. Confidentiality is really key. The seller, they don't want someone coming into their place of business and letting perhaps their employees or their vendors know that it's for sale. That can unnecessarily shake things up. So be prepared to sign an NDA and just trust and respect that confidentiality is so important for all the parties involved. Additional considerations. Is the seller really ready to exit? I would say I have just worked with countless clients in the past that have gotten mentally, emotionally, psychologically invested into researching a business. And they're looking at this acquisition and start to get really excited. I can see myself owning this business. This is just right for me and my family. They invest time, energy, and resources in conducting due diligence, only for at the last minute, the seller to realize, I'm not ready to sell yet. And it is truly heartbreaking. Will the customers stay under new ownership? How will you quickly grow the business to justify paying this premium? We're paying a premium for someone who has done those first years of getting the business started up. So we're paying a premium for that. How can you quickly grow and scale beyond that? Also, I would expect to make additional investments after the acquisition. We might need to reinvest in equipment, software. Sometimes we don't know what we don't know until we actually get in there. There might be some skeletons in the closet. So just know that that could cost additional investing and additional resources. Employee attrition, they may not stick around, as I had mentioned. And even in your due diligence process, expect to pay two to maybe 10, maybe $15,000 in advisor fees. CPAs, we want people that have our best interest at heart, that have a special area of expertise and knowledge to really help you evaluate the opportunity. So be prepared to incur some additional costs. Now, in terms of franchise investing, there are probably some things on this list that you are very familiar with when it comes to franchising, but there might be some surprises. I work with FranNet, and we largely work with boutique franchises. So I'm not going to be shy about that. I do believe that franchising as a path is probably the most misunderstood and overlooked of the four paths. So obviously with a franchise, you get name recognition, you get a license, but really what a franchise is it's a business system. So whereas a startup entrepreneur, independent consultant, you are creating systems. With a business acquisition, there might be some systems in place that you could be fine tuning. The thing with a franchise is there are already systems that have been proven to work and that have been executed by multiple people in multiple territories. And franchising includes training and support. Now that is part of a franchise fee. That's not just given to you, but there is training and support not only from the franchisor, but from other franchise owners that are in that same franchise brand that work in that same system. Statistically, franchising has a higher success rate. I mentioned I was in a seminar earlier this morning. The statistic they provided was a 90% success rate. Franchising, it tends to have a faster ramp up because we're not working through the trial and error. Somebody has already done that. So really what we're devoting our time and our energy to is what has been proven to support the bottom line. So there tends to be a faster ramp up with more predictability, more financing options. Franchising is regulated by the Federal Trade Commission, and all franchisors are mandated by law to provide a prospective owner a franchise disclosure document, which I'll get into in a couple of minutes. And in franchising, it's really more of a culture. It's more of a family. And honestly, I used to roll my eyes when people would use that expression because I'd never really experienced that firsthand. But in franchising, they often say you are in business for yourself, but not by yourself. So you are in business for yourself, but there are many other people that own and operate the same business that you do in parallel. They're not in competition with each other. If anything, you can learn and grow from each other's experiences, leverage what they've learned, leverage their successes and failures, and learn from them to support you. So you're really part of something bigger. Some people really like that. Other people just prefer flying solo. It's really what makes the most sense for you. And also what surprises a lot of people is in franchise investing is I need to clarify this, there's no industry experience that's necessary. Experience in terms of transferable skills, absolutely necessary. And that's going to vary from franchise to franchise. Some might require you as an owner to have experience in leadership or management, maybe overseeing the financials. So those soft skills are necessary, but they don't have to be industry specific. So disadvantages to franchising. Most franchises have defined territories, and that might be defined by a certain population density or a geographical radius. So a disadvantage would be if there is a certain area that you would like to own or serve in this business, it may not be available to you, either because it's been acquired by someone else, or perhaps you live in an area where there isn't sufficient population to support a franchise unit. So something to keep in mind. There are royalties and ongoing royalties and marketing fees in franchising. Uh, this is what provides you with the training, the support, the branding, etc. And there's a rule book. So some franchises have very structured, perhaps even stringent rule books, you might say, is this is how we operate and execute this franchise. Other systems have more parameters. Their rule book looks more like some parameters where you've got a lot of room for innovation within those. One of the resources I'm going to provide you access to is what we call an entrepreneur profile. And it's a psychometric profile. It's just like a DISC or a Myers-Briggs, but it's specific to entrepreneurship. And one of the things it measures is compliance, is measures someone's willingness or ability to comply or follow a system. That might be a great indicator for you, excuse me, if based on your compliance, if you would be better suited as a startup entrepreneur or an independent consultant or a franchise. So it's a resource that will be available to you here in a little bit. So with the rule book, it basically involves some shared control, and there are fewer industry options. So franchising tends to go into an industry where there is already demand, but usually it's highly fragmented. And what franchising does is it goes in and it serves this demand with more efficient systems, processes, procedures, and marketing and sales, if you will. And so what that looks like is if you have an idea for a business or some brand new industry, chances are there may not be a franchise system available because it is still so young that we're not yet seeing the demand for it. All right, some considerations for franchising. Can you work within some guardrails? And it's not one way is good, bad, right, or wrong. It's really about what makes the most sense for you. Do you enjoy being part of something bigger? And so again, I'm going to close my door here. So again, do you enjoy being enjoy being part of something bigger? So franchising, you're in business for yourself, but not by yourself. You can access a network of other business owners in the same franchise system. Does that work for you? Really want to highlight that franchise investing is less risk, but it's not less work. This doesn't mean it's going to be easy. If you think that investing in a franchise is a sure thing, it's not. It is less risk, but it is no less work. Someone is still providing leadership, management, sales, customer acquisition, operations, HR. Someone still needs to do all that work. I would say compared to the other paths, it's not less or easy work, it's just different work. Because the work you're doing as a franchise owner is executing the systems that have already been proven to work. Do you have the appropriate transferable skills? Again, not industry specific, but if you find a franchise brand that you really, really like, and the role of the owner is really heavy on managing and leading people, and you have experience in direct sales, may not be the right skill set for you to really be happy and successful in that business. And lastly, you may choose to work with a franchise attorney to review a franchise agreement and to help you. I implore you, please only use an attorney that specializes in franchise law, that has deep and extensive deep and extensive experience in franchise law. This is its own area of law. I do not invite you to work with a divorce attorney, a business attorney, an estate planning attorney, work with a franchise attorney. I am more than happy to provide you with some personal recommendations for that. And also one clarification, and this surprises people, is usually we hear the word franchise and it sounds like French fries. Usually we think of the $5 footlong or the Golden Arches. And what surprises a lot of people is that there's about 4,000 different franchises available in over 90 industries. And I'd like to give you some examples. And these are some examples of FranNet clients. Joe, great guy. Joe is a director of a logistics company, and he decided to move forward in this residential and commercial junk removal company that is largely eco-friendly. One thing that I find really interesting is that when this business option or recommendation was presented to Joe, his initial reaction was, no way, I'm not going to be the trash guy. Within 1 to 2 months, Joe not only bought one territory, but he bought the entire Orange County market, you might say. He is not driving the truck. He is overseeing the team. He is running the logistics. He is overseeing the P&L. And this was something that's similar to when we buy a house and we set out what it is that we want in a house. When you work with someone at FranNet, we're going to help you really clarify what is it that you want in a business. And this business fit the model of what he sought. So he had an open mind, was willing to learn more, and realized that he thought this was the right fit for him after some due diligence. Yuri was a CEO. He was looking for a semi-passive or semi-absentee business. So he moved forward investing in a healthcare franchise where he is semi-passive. Michael and his wife, super nice guy. Michael was an engineer. He worked with Charlie McGee and built a business model. Again, it's like a blueprint of what is it that you seek in a business? What do you want that business to provide to you personally, professionally, in terms of your lifestyle? And Michael acquired the rights to fitness machine technicians. And I'm very happy for the success that he and his wife have are experiencing even in 2020. So here's some other examples of new business owners that did not have industry experience, but they moved forward with entrepreneurship by creating a plan, a model, if you will, having a coach, having an advocate to help them research their options, and they decided to move forward in entrepreneurship. Now you might be asking, how much do I need? Most of the time, the parent company is looking for someone who can access about 25 to 30% of the total investment. And oftentimes people finance the rest. Now, where you might find this 25 to 30%, you might have it in personal savings. This might be something that your family or a multi-generational investment that your family is a part of. Some people pursue a home equity line of credit. SBA loans are certainly an option. One thing I would say that is specific to 2020 and 2021 is SBA is actually a little bit more focused on industry experience than they have been in the past. And also SBA loans are simply taking longer. So if you're starting your due diligence and you would like to have the option to acquire a business in the next, 4 to 6 months, and you're pretty sure you would need an SBA loan to move forward, I encourage you to start the SBA process right away, really sooner than you might think. What we want is for if and when you find the right business for you, what we want is for you to be in control in terms of when you get your doors open. What we don't want is for you to have found the right business and then have to wait months and months for the SBA. One of the benefits, one of the reasons why so many people pursue entrepreneurship is to be able to make decisions and be in control, right? So one of the ways to do that is to get started on your financing strategy sooner than later. Also, securities-backed loans are an option. This might be a portfolio loan. These right now are pretty low rates, and they tend to be available relatively quickly. If it's a resale, there might be seller financing and it's an acquisition. And also, I would say at least half of my clients utilize this, and the general public and even a lot of financial advisors are not aware of this strategy, is a 401k rollover. The acronym is ROBS. It stands for a rollover for business startup. And what you can do is use a portion of your retirement without paying taxes or penalties toward the acquisition of a business. The IRS will not charge taxes or penalties as long as it is used toward the acquisition of a business. That could include a business acquisition for a resale or even a franchise investing. Similar to franchise attorneys, working with a professional that has deep, extensive experience and understanding, doing a 401k rollover needs to be done by a specialist. If you go to your local bank, there's a very good chance that they won't be able to help you. Again, I'm happy to provide some resources or referrals of a couple of organizations that have worked closely with FranNet for decades and that specialize in just this kind of thing. It really needs to be set up appropriately. Now, a lot of people ask, well, how much does it cost to get into business ownership? When it comes to the franchises that FranNet works with, and we work with about 200 to 250, about almost 60% of them have a total investment of $250,000 and under. This doesn't mean you need $250,000 out of pocket. We just talked about how much you would actually need and where you might need that. But I do like to clarify that some people might be surprised by the options that are available to them. When we start to get into the 200 to 250 plus range, these are usually semi-absentee or semi-passive businesses where you as the owner are really more of an investor. These are manager-run businesses. And so you are not involved in the daily operations of the business. You are really working on the business, oftentimes remotely, managing the manager, overseeing all the information and data that is generally cloud-based. Very common question. And if I have any colleagues, I know I have some colleagues on today's session, you might be cringing like, oh, Emily, you can't answer how much money can I make? But this is a really common question, right? We get into business ownership. One of the reasons is to make money. So this is what's specific to franchising. Now, I don't want to get anybody too excited because the truth of the matter is I can't tell you how much you can make, but I can tell you how you can learn. So as I'd mentioned before, franchising is regulated by the Federal Trade Commission, and all franchisors will provide an FDD, which stands for a franchise disclosure document. It is usually several hundred pages, a couple inches thick. And this is some of the information that you can expect to access from the FDD. You can learn about the franchisor and their background. It will be a specific breakdown of the costs of entering the business. It will include the franchise contract. It'll provide you a deep understanding is if I were to enter this system, what is the franchisor responsible to providing to me? And in what ways am I accountable to the franchisor? What are the fees, transferring, licensing? What are these policies? Many franchise disclosure documents have an earnings claim. It's item 19, and that will give you a general understanding of what other franchise owners in that system are making. Now, this is very, very helpful information, but there is so much more to the earnings of a franchise than the item 19. So if you think, hey, I'll just access the FDD, I'll turn to item 19, I'll look at the earnings claims, that's not enough information for you to understand how much you can make. The biggest, most important step in researching a franchise, which is completely different than the other three paths, is to speak with other owners in that franchise system. And you can ask them, what is it really like, a day in the life of owning this business? You can ask them about challenges. What are your concerns about this business? Maybe it's a leadership or management. Maybe it's customer acquisition. You can ask them about that. You can ask them about the support they got from the franchisor. And they're going to tell you what it's really like, the good, the bad, and the ugly. They're not selling you anything. They were once in your shoes. When it comes to how much can I make, these are people you can ask, and you might say something like, I am looking to replace a 6-figure corporate salary. Do you think I would be able to do that in year 1 or year 2? You might ask, is this a business that I would need to acquire additional territory to meet my financial goals? How soon did you break even? So these are questions that you can ask 5, 10, 20 different franchise owners. And the goal is to talk to enough owners that you start to hear the same things, that you can get some predictability around when you can expect to get cash flow positive, when you can expect to perhaps reach your financial goals. Because what we want is we're starting to hear the same thing. Okay, most franchise owners in this business break even at this point. They start taking a salary at this point. If you speak with a bunch of franchise owners and they are not reaching the financial goals that you seek for yourself, then this might not be a good fit for you. But at least we're starting to we're mitigating risk and we're increasing predictability around how much money is available to me in this business if it's the right fit for my transferable skills, if it can satisfy my lifestyle goals and get some predictability on how, if, and when it can satisfy your financial goals. And that level of candor and transparency, it's just not available in the other entrepreneurial paths. So some free resources to help you navigate the waters. Some suggested reading material. The E-Myth has been around for many, many years. Still, its teachings, its practices are so relevant today. Built to Sell is a great read because the benefit of business ownership is not only earning a regular income, but creating a sellable asset. So how can we maximize the value of our business for when we are ready to sell? And that's exactly what Built to Sell was written for. Specific to franchising, I recommend Street Smart Franchising. I think Joe just does a phenomenal job of breaking down like the good, the bad, and the ugly when it comes to franchise ownership. Like, here's some things to look out for, the good things, here are some dangers. I had a client, I personally give a copy of this book to my clients, and I had a strategy call with one of my clients recently. He's about 3 weeks into his research. He said, thank you so much for the book, but I haven't started it yet. And I said, I really encourage you to start reading this book. Just clients over the years have told me how valuable it was. And about 3 days later, he texted me on a weekend and said, thank you for this book. I've started reading it. Now I understand, the conversations that I had before, and this addresses the concerns I have. So get informed. Additional resources, the Small Business Development Center, SBDC, and the SCORE. These are arms of the Small Business Administration that provide free business advising, whether you are thinking about getting into business ownership or if you are an existing business owner. They provide free advising, free coaching, and there are local chapters, local centers all over the country. Of course, the SBA is a phenomenal resource, and FranNet. So these are all resources that provide free advising and coaching to really help you on your entrepreneurial path. Now, if you're wondering which path is best for me, I had mentioned earlier, this is an entrepreneur profile, completely free, that you can access. This is very similar to like a DISC or a Myers-Briggs, but it is specific to business ownership and self-employment. I had mentioned that I am also a mentor for some job seekers. I work with a lot of job seekers that take this profile and actually utilize some of the information. And I've literally had them tell me that they copy and paste it onto their resume or use it in their cover letter. It is really the best way, in my opinion, to start identifying which path makes sense for you. And frankly, even if business ownership makes sense for you. I have a screenshot here. Even if you look toward the bottom of that screenshot where it says business development, it can identify if someone is best suited for independent contracting or startup entrepreneur. It will identify business acquisition. Maybe franchise ownership makes sense for you. It takes about 20 minutes. Your results will be emailed to you automatically in an 11-page report. I believe it does involve some translation. So you can work with myself, Charlie, Blair, whatever FranNet consultant is local to you. And we're more than happy to jump on a call and really help you understand the results so that you can see what next steps are really in your best interest. Also, you can request a recording of today. You can request the entrepreneur profile. I've got a little screenshot here of a roadmap to success. It's a really simple, easy read, and it provides a lot of information for you to maybe ask yourself as you're thinking about business ownership. So get out your phone. If you want to turn on the camera option, and if you want to request any of these resources, just turn on the camera, hold it up to this QR code. It'll take a second to focus, and then you'll get a browser pop up like a Safari or Chrome. And you can just enter in your information and request whatever follow-up resources you want. I believe the entrepreneur profile, when you use the QR code, I believe it's called the personal franchise assessment. It's the same thing. Really, it's the same thing. I never want anyone to feel like, hey, wait a second, I'm not interested in franchising. That's just what it's called. But that is the entrepreneur profile. Also, let me know if you'd like to have a quick conversation. If you're not ready to jump into the profile, or maybe you want some information, just let me know if you'd like to have a quick call. I love talking with you and learning about you and your goals and seeing how I can help you. FranNet is really well networked, so we're happy to make referrals and introductions, really just to support you in whatever way works for you. Feel free to connect with me on LinkedIn as well. So I've been talking fast. I'm going to go ahead and stop sharing my screen. We did go a little over. I knew 45 minutes was going to be tight. Are there any questions or anything that anyone would like to jump in and ask? Okay. Well, thank you for your time. I'm going to go ahead. I'm going to pull up that QR code just one more time for anyone that needs it. Feel free to give me a call or email. And I wish you the best in your entrepreneurial journey in 2021. Thanks, everybody.